Adani Ports up nearly 2%, Shriram Finance, SBI Life all participating. On the flip side, it is IT which is correcting. So TCS down about 1.25%. And this is a heavyweight, must be the top contributor on the losing side. Wipro 2, Tech Mahindra, and to an extent L&T and SBI looking slightly wobbly is adding to that bit of pressure. So in some sense, it's IT versus autos with a little bit of HDFC Bank thrown in there to give that bit of a push on the index on the large cap side at least. But the broader end of the spectrum still doing very strong. Like just the point I made. But the broader end of the spectrum still looking very strong because the market breadth, despite coming off from the highs, is looking very, very positive, Tamanna.
Oh, and it's all about defense. What an afternoon for defense stocks. And that's where the entire story is. Niraj, viewers, I would reckon that defense stocks are completely on fire. Let me pull up Paras, let me pull up Mazgaon, Cochin, Bharat Dynamic. That entire list is, in fine fettle. 16% up, 17% up on a Mazgaon dock, Cochin Shipyard. Paras Defence is also our stock of the day, so I'll pull that up, 20% up upper socket. And Bharat Dynamic also 7% up. Now, there's likely no fresh trigger. We already had 24 hours ago at this time a statement by the Defence Minister talking about how the Make in India push would increase, but that entire flow continues to show through the market today. A few other stocks to note. I'm going to talk about Prestige. Prestige is having a good day all through today, a good Friday. Target price at 2320 as per CLSA, so that's helped Prestige, and that's been in focus all since morning as well. Let me see if we can pull up Prestige if possible, or otherwise maybe on the wall if you're not able to do it on this lot. Either way, let's look at Suven Pharma as well. Suven Pharma also seeing a spike up after they've acquired a 67.5% stake in Sapala Organics. That's Prestige for you. Suven there on that acquisition is looking with a good course through the day. Of course, the other big stock that we've been talking about since morning is Ambuja. That's a big one because consolidation in the cement sector is going to be in focus, and we'll have a special report for you in just a bit on that. 1.5% on Ambuja. Dixon Technologies has also hit a lifetime high, so it's a good day for Dixon, like M&M, and I think Niraj spoke about it. M&M also completely fast and furious. Dixon Tech about 2.5-3% up, and GMR is the other one that I would note. Jefferies has a positive call on GMR Airports as well, so 2.5% up. I would say that the mood is definitely lifted in the second half, Niraj, compared to what we saw this morning, and I'm a little surprised that this is happening ahead of a long weekend, but positions being taken in the last bit of trade.
And after the kind of move that we had for the defense stocks yesterday, it's quite astounding that this is happening yet again and clearly standing out. But autos, defense in the right lane, going very strong. Let's talk of what to do in a scenario like this ahead of the long weekend. Like we said, Vijay Chopra, MD and CEO of Enoch Ventures, joins us on the fundamentals in a bit. We'll, of course, get in our technical experts as well. Vijay, good having you. Thanks for joining in. I can't take your eyes off defense, Vijay, even as you look at the markets and look at autos and look at IT. The statement from the minister yesterday set this sector on fire. What do you do now that the stocks has passed through a series of ebbs and flows and are rising quite strongly today?
Well, yes, I think that the people who are holding it, they should keep on holding and keep on booking profits as well. If at all you see a lot of steam in the stock, Paras Defense, for example, or Mazdoc, you should keep on booking profits, and it should be partial profit booking. So if you have 100 shares, so probably you can sell 25 right now, and then on every higher level you keep on selling 25 shares each. So I would say that fresh entry, absolute strict no at these levels. Wait for corrections to happen. So these are statements made by the minister, and definitely respectable because what this clearly shows the intention of the government. I think that the intention of the government regarding defense has been very clear since last 3 years, and we've seen a stupendous rise in most of the stocks. From HAL to BEL to BEML. All these stocks have probably gone up 3-4 times. But yes. The silver lining is that there's a huge order book with each one of these companies. Look at Cochin Shipyard. The order book is maybe twice or thrice the size of the MCAP, and similarly, so I would say that all these companies are flushed with orders. So the rest we have to wait for results, and the particular performance on the delivery. One is getting an order, the other part is delivering that stuff within time frame. So I'm fairly bullish on the defense space with a longer term perspective. And yes, again, I'm stating, I think I've done that on the channel a couple of times earlier as well, that if India has to become a 5 trillion economy, they cannot do without defense. So all the major defense companies, I think that they are in a sweet spot, but just don't jump and buy. Markets are at all-time high. Just wait for some correction. And so some legible correction would make the re-entry possible into these stocks.
The reason why we are also seeing those stocks run up perhaps is, and let me go into the minutiae of what Rajnath Singh, the defense minister, actually said. So he did say we want completely new targets and unsurpassed targets for defense exports, but you had about 21,000 crore rupees of defense exports from India in the last financial year. He's now said that the target for FY25 is 50,000 crore rupees. So you have doubled and more the defense export target, which is why you're seeing that kind of a push. Now, will you see something come maybe in the budget which promotes this is the question? Will you see maybe more deals being inked between countries? Because really, if you have to have defense exports, these are government-to-government conversations. That also remains to be seen. But Paras Defense, of course, the stock this afternoon. Jay Bala also joins us from Cash the Chaos. Jay Bala, very good afternoon to you. Great to have you on. We're talking about the defense stocks buzz that we've been seeing in the markets, sustainability. The reason seemed to be the defense minister, Rajnath Singh, being very, very clear about pushing defense exports in term 3. But on the charts, which of these do you like?
Yeah, BEML, Bharat Electronics, both look very strong from the PSU space. And Hindustan Aeronautics, that's also looking very interesting. But most of them are quite stretched, and we've been bullish on these names from November, December of last year. So they've got quite a bit of run, and they still have some more pending. But possibly we have some more short-term pullback due. But most of these names are quite stretched. So some amount of caution. It's not for new entry. It's for pyramiding positions for people who already hold and continuing to trail in the existing position.
Okay. Would you exit positions in any right now, like a Cochin, a Mazga, or even a Paras Defense at these levels?
No, not yet.
Not yet.
Still got still got some more steam left. That kind of entry that if you had, say, around even something like early March or end February, that kind of entry is quite desirable and unlikely to get. So that's the reason why you need to continue to hold, but hold on with trailing stops.
All right. Stock in focus today is also Ambuja Cement. The company has announced the 100% acquisition of Penna Cement. The transaction is set to be completed in 3 to 4 months and will be funded via internal accruals. Mihika is joining us to give us more details on the story and also how brokerages are seeing it. Yes, Mihika?
Yes. So let's start with the capacity details. Now, the acquisition will add 14 million tons per annum of capacity to the Adani Cement Group, which will take its total capacity to 89 million tons per annum. Now, 10 million tons per annum is currently operational and 4 MTPA is under construction. But this under construction capacity will come on stream in 6 to 12 months. That's what the company has said. When you talk about its market share, the capacities of Penna Cement Industries is spread across states like Andhra Pradesh, Telangana, and Rajasthan. So what this will do is improve its South India market share by 8% to reach to 15%, and it will also improve the Adani Cement Group's pan-India presence and its market share by 2%. When you talk about how it benefits the company, now in terms of cost efficiency, there's an opportunity to improve the company's efficiency as well as the green power mix. The company's also gotten 650 million tons of limestone reserves at a nil premium. It will also help the sea transportation logistics logistics and will connect it to 5 bulk cement terminals. And this helps the company reaching its aim to achieve sea logistic movement of 10% of the total movement by FY28. Now, also in terms of profitability, it expects to improve capacity utilization to 85% by the third year of acquisition, and it also help achieve an EBITDA per ton of 1,500 rupees per ton. When you talk about brokerages, we have Nuvama, which maintains a buy rating at a target price of 767, which offers a 15.5% upside to yesterday's close. Now, what Nuvama believes that there's the potential turnaround in Penna Cement's liquidity will enhance the value for the company, and they also expect utilization ramp up to bring additional volumes to the market, and they could see a similar turnaround like Sanghi Industries. And lastly, we have Citi, which maintains a neutral stance at a 675 rupees target, which the stock has already crossed. The transaction EV per ton is at $93, which is very similar to the cost that the company will take to set up a greenfield project from scratch. And what the transaction does suggest is that the company can deliver its growth plans, is what Citi has said. And lastly, the neutral stance is solely because all the positives for the company Citi believes are already priced in.
Okay. Now, Jay, I'll first come to you on the cement names, because, and Ambuja in particular, but the others too, because they've been in news now for a while, the last 1 month or last 15 days. Is there more steam left, or would you be a profit booker here?
In fact, one of my candidate for today's pick was Ambuja Cement.
Oh, okay. So why not lay it out? Yes, sure, Jay. Good morning.
Yeah,
good afternoon. Yeah.
I would have gone for it, but I've just I just ranked it 4th on my list. So it's a good candidate. It's got some more upside potential to work with. Probably 800 is on the cards. I don't think it's going to drop below 585. So the risk reward is not that favorable, but it's definitely favorable. It's got some more steam left, and fresh all-time highs are continue to be likely for the stock.
Okay. What's the other idea? Let's just mention that, and then we'll go to Vijay on cement.
Yeah, I have an interesting pick called Sasta Sundar. It's breaking out from a recent consolidation pattern. It's got a price objective close to 700 in the medium to long term, but in the short to medium term, we have a price objective of about 540. Stop loss at about 300 for the stock. And I also like NBCC at current levels. NBCC looks very interesting. It's also on a breakout, and it's likely to touch about 210 in the short term, and a stop loss about 138 makes a very attractive bet for the stock.
All right, so those are the picks for Jay, but Vijay, just your take on Ambuja Cement, and do a quick Ambuja versus Ultratech for us, because those are going to be the big players. Consolidation is the name of the game in that entire space. How do you see this development?
Well, I think what Aditya Vikram Birla Group did a few years back, now Mr. Adani is up to the same. Buying over Ambuja and ACC and playing the India infra story. I think they have done it beautifully. And the new acquisitions, I'm sure that there are many in store. So this this entire story is about economies of scale, getting the right assets at the right price. And as you said, that you get access to a lot of limestone mines and dolomite mines. So it's all about getting the right assets, and then probably you can play on the pricing, because the government of India doesn't allow, because the cartelization to happen. It's kind of a market where there is a control. The government doesn't allow the cement prices to go up like that. They do not have the power to do that. But again, they can bring down the input costs. So this is the entire fight all about. So I think that there are power centers and polarization happening in the cement space, and we are going to see on one side the Birla Group versus Adani. So definitely there's going to be a fight, and whenever there's a fight in the market, it's always beneficial for the consumers. Like what we have seen in paints, the Birlas have come up with the paint thing. It's a huge competition to the Asian Paints and other Berger and other players in the market. So coming back to Ambuja, I think there is a lot of steam left in Ambuja over a period of time. Ultratech has moved up quite a bit, so it might correct. Good price would be anywhere between 9,000, 9,500. Ambuja, I think that it can still go up to 700, 750, and then wait for a correction to enter. So this consolidation and new acquisitions would definitely bolster Ambuja's position and ACC's position in the market. If you ask me, there are few companies which I think can do well. I think that stocks like Star Cement, stocks like Ramco Cements, these companies are mid-cap companies. They can do well. Deccan Cement has gone up quite a bit. I think there's a small company called Udaipur Cement which was taken over by JK Lakshmi. So that is also one company which I think can do well over a period of time. It's about 40 rupees. And Dalmia Bharat is also one company which I think can do well in the longer term. So India is going to be a hotspot for the infrastructure development. I think a lot would be happening on the roads space where Mr. Gadkari has taken over. And I'm sure in this upcoming budget, we're going to have a huge outlay on the infra. So again, if infra spending goes up, it's directly related to the cement space, and the beneficiaries would be all the large players.
Do you think the smaller players, by extension of that logic, Vijay, suffer? So you talked about Dalmia Bharat, that's down today, Ramco. As you see more and more consolidation taking place, what happens to the smaller regional players?
Tamanna, as I said, it's all about the economies of scale. Say, for example, Mr. Adani and Mr. Birla have, it's the clash of the titans. So they have access to wonderful mines, and if you have input costs coming down, so they have higher margins to play upon. So probably they can give better dealer margins. So there, I think the smaller players get into a trap. They cannot give dealers a lot of margin because of the cost pressures and the coal prices going up and down. So the coal prices have been up quite a bit. I think that they haven't softened due to the increasing power demand. But coal is also used as a major component in cement. So I think that it's definitely going to be tough. And as the market consolidates, there would be bigger players like what happened in telecom. Probably we might see the same in cement, and smaller companies may give way to the larger ones, and maybe they could be acquisition targets.
All right. So that's the whole cement story, and something we've been covering in depth. We'll take a very short break, but we'll come back with more stock ideas, how to prep yourself ahead of a long weekend in terms of your portfolio and more. But all of that after the break. Welcome back. You're watching India Market Close, and it's all about the defense play this afternoon. Also exciting news with the Hyundai IPO details coming out, broken first and exclusively on NDTV Profit. In case you missed it, let me remind you about that. But before we get to all of those details, I also want to talk about Prestige. Prestige is having a good day because of that CLSA report. And, about 3% up. I'm going to take a quick view from Vijay Chopra and Jay Bala before we get to the rest of the show. But Vijay, CLSA quite positive on Prestige at a time when the entire real estate pack has run up. What would be your take? You're on mute, Vijay.
Extremely sorry. I think that, we are just round the corner. The interest rates would start coming down. And the real estate is an immensely interest rate sensitive sector. So my sense is that, companies like Prestige, DLF, Sobha, Brigade, the larger ones, and, macro tech developers and all, they are all going to be benefited by the interest rate cut. So I think that, although these companies have moved up since the correction last Tuesday, but yes, I think there is some steam left for sure. In a correction, one should buy. Again, I'm iterating that, just don't jump and buy. Wait for a correction to happen and then buy these companies. Once the interest rates start coming down, we're going to see the best of the real estate sector. Reasons: one, that, the overhang of inventory has almost gone. 4-5 years back, there was a huge inventory backlog, which the builders were not able to sell. But now the inventories have, gone down, and they have a lot of cash in hand. The builders like DLF and Godrej Properties, they just launch a product and a project, and it's gone in one day. So they are able to garner huge amounts of money because of the interest in the real estate space, and people want to invest. And once the interest rates start coming down, I think that all these companies would be benefited. So I would recommend that, be with the top ranked companies. That is a much better strategy.
Okay. Well, so that's as far as Prestige goes and some of the real estate stocks go. Remember, Kotak came on a very positive note on some of the real estate names as well. But the other one in focus is GMR Airports. Not a big move today, but it's in focus because it's had a move. Chris Wood has initiated a 4% investment in the company by reducing his bets in banking stocks. Now, Rucha Johnson with the key details of what's happened in the Chris Wood portfolio and what's happening with GMR Airports Infra per se. Rucha, good afternoon.
Good afternoon, Niraj. Thank you. So, as you rightly mentioned, Chris is introducing 4% investment in GMR Airports, and this will be ideally financed by reducing investment of 1 percentage point each in ICICI Bank and HDFC Bank, and 2 percentage point decrease in Axis Bank as well. Now, talking about GMR Infrastructure, so it is a private airport operator in India and operates the Delhi and Hyderabad airports. Now, recently, Jefferies had initiated a buy recommendation in this stock. This was at the end of the May, and after that, like within 1 month, the stock has given 6% returns, and Jefferies has a target price of 100 rupees, which implies another 6% upside from the current levels for the stock. Now, talking about the performance, the brokerage house sees EBITDA to grow 3 times in the next 5 years from the current levels. Now, this is on the back of strong air traffic growth outlook and travel retail opportunity. Now, Jefferies is also expecting tripling of the tariffs at Delhi airport in the next 4 years, which will be beneficial for the company. And also the non-air revenue, like the customer spending at airport, etc., could also benefit the company. Now, talking about the financials, the Jefferies, the brokerage house, expects the company to turn PAT positive in about a year, in FY26, about 2 years, and the leverage ratios also to moderate. So that's pretty good for the company. But the key risk that the brokerage house also highlighted includes slowdown in air traffic, delay in the tariff which the brokerage house is expecting for the company, and adverse regulatory changes. So this is the outlook of Jefferies on the GMR Airports.
Well, Rucha, thanks for summing it up well. So that's the view on GMR Airports Infra. And Jeb, I was talking to somebody who was telling me about how at above 93 or 93.5 or 94, this is some multi-year breakout. It could take the stock into newer orbits. Any thoughts here?
No, 130 is the multi-year breakout point, and it's looking quite strong. But I don't disagree with that. But just a small, the breakout is actually at 130 odd levels, and that is quite a bit of upside. But in the extreme short term, it's slowing down a lot, and that's the limited caution that's out there. But I would look to be a buyer around 81 mark if the stock were to pull back there, and then that'll make an attractive risk reward. But I don't think it's a multi-year breakout at current levels.
Okay. Okay, so are there targets here, Jay, for GMR?
Yeah, I would want one pullback. If it does that, I would expect the stock to push towards 120. So that's the price that we took from current levels, close to about 120.
Okay, well, so that's one stock, and now onto an NDTV Profit exclusive. Sources tell NDTV Profit that Hyundai India is all set to file the IPO with SEBI today. My colleague Tushar Deep Singh joins in with more on this. Tushar, what are you learning?
So after months of speculation and rumors, we have learned from our sources that Hyundai India will file for its IPO with SEBI today itself. What we know so far, on offer about 142 million shares, which is equivalent to 17.5% of the company. Citi, HSBC, Kotak, as well as Morgan Stanley are the managers for the IPO. Roadshows for the IPO will begin sometime in August. Now, why is this relevant? If Hyundai India goes for a listing sometime in this year, it will be the first auto company or car maker to list in India in the last 20 years. Remember, Maruti Suzuki listed at Maruti Udyog in 2003. You remember, Hyundai India is a rare case as well. It's a rare international car maker who has been successful in India at a time where both Ford, GM, and others have actually bowed out due to the competition that is being seen. Hyundai India is now India's second largest car maker, right after Maruti. So the time is actually right for it to tap the Indian markets.
Okay, so that's going to be the exciting one. The rest of this year is looking very exciting for the primary markets. We know Ola Electric is coming perhaps as early as this month. You have Hyundai India within the next 6 months. Vijay Chopra, looking at how the auto space is also revving up, how do you look at the Hyundai India IPO? It's going to be the second largest after LIC. You think will be well received?
Well, I think yes. The auto numbers have been more or less in line. One thing I would like to tell the viewers that whenever you see a dip in the auto numbers, you can be confident that the economy is not doing good, or it's not going to rise. The GDP numbers are not going to rise, or we are not going to see any increase in the overall economy. While on the other side, if the auto numbers are stable or on the increasing trend, this means that the economy is doing fairly fine. The reason is that people, when they have money in their hands, they go and improve their lifestyles, and buy bikes or scooters or cars, maybe starting with the entry level cars to the luxury ones. And what I hear from the market, the channel check says that there's a huge waiting line even for the luxury cars. So it's not readily available. You go to a showroom and buy. Of course, the action is hotting up with Ola Electric and Hyundai. And I think that Ola recently got its approval from SEBI. So I think that this excess capital which Ola would get, it would retire a lot of its debt, and probably should work towards becoming profitable. On the other side, Hyundai has been a really old hand in the Indian markets. They understand the Indian markets very well. And like Maruti, they've got some fantastic models, and the models like Creta, they are on a waiting. So I would say that there are two titans right now. The Maruti and Hyundai, they both understand the Indian markets very well, and they've got a lot of experience under the belt. So I would say that it should be a good IPO, although the size is large. But I think the appetite is growing in India. The retail participation, the way it has gone up in the last 4-5 years, the appetite is huge. And it should be a good IPO. Ola, I would say that it's a tad lower than Hyundai because they are still in the formative stage of their company, and India is embracing the EV initiative. So it would take some time, but I think that Hyundai should be a good IPO.
Yeah, absolutely. Just since we're talking about the auto space, one more for you, Vijay, is about M&M. M&M has also hit record highs today, and the story this morning was about how their new launches are lined up, including their Born Electric. By 2030 they have quite a big lineup, and you're seeing M&M about 2.5% up as well. In this entire picture, how do you look at an M&M?
Well, M&M is a different animal altogether. Now you look at the overall composition of M&M. They do mid-size buses, they do They do a lot of work in the defense. They do passenger cars and SUVs. They've done scooters in the past. They also have a tech company. So Mahindra is a different, and of course agri space you cannot forget, because they have a fairly large exposure as far as the agri equipment and agri space goes. So their product pipeline is and product line is much more diverse than that of Maruti and Hyundai, so to say. So I would say that M&M is a buy on any correction. The way this company has actually transformed itself, post the launch of XUV 700, I think that the kind of booking it's got, they've got the new Scorpio models. What I hear is there's a lot of waiting. So there's a huge interest in Indian markets, not only in the tier 1 cities, but tier 2, tier 3 cities. Mahindra happens to be a darling there, because the kind of roads we have there, the Mahindra vehicles are quite accustomed to take on those challenges of driving on that kind of roads. So I would say that it's not an apple to apple comparison, but yes, Mahindra is coming up with fantastic cars and SUVs. And the way XUV 700 has performed, and XUV 400 they're coming up with, they're coming up with their electric vehicles. I'm sure that Anand Mahindra has a lot in store. But yes, apple to apple comparison, I think that they have a much larger portfolio. So you should look, maybe there might be demergers later from Mahindra and Mahindra. They demerge their passenger car business and the agri business. But yes, Mahindra is again a very, very strong force to reckon with.
All right. Now, meanwhile, the Nifty has touched an all-time high at 23,490. Reached 23,490 levels of an all-time high. That's exciting times. We are very, very close to 23,500. You reckon we have enough time actually to breach it?
Who knows, yeah?
You think today is
the way
the day?
Reliance and HDFC Bank are doing, Tamanna.
Yeah, exciting times. Jay, just a quick view on the Nifty.
Yeah, basically Nifty has got post-elections extra time to proceed with the existing trend, which is higher. And my objectives are about 23,700 and 24,025. So, but I don't think it comes straight away. The 24,000 level I'm talking about, this new high that we may get today, it might get pushed back one more time, and it will be good for the Nifty to consolidate above the 22,700 mark. One pullback will make it healthy. The markets have gone up from 21,200 to 23,500. So that's it's a bit of a struggle for the overall large caps. But one pullback will do a lot of good. But objective remains higher for about 24,025 on the Nifty.
Yeah, we'll take a quick break. But just before that, I want to pull up the Nifty constituents and what's really driving that. And in the driver's seat is Eicher, M&M, of course, right on top. Shriram Finance, another great day. Adani Ports, that positive Kotak report is possibly helping. All of that is doing well. But the contributors to the Nifty is what we should also pull up. And HDFC Bank will, in all likelihood, be up there. RIL, M&M as well on the plus side. Exciting journey. Are we looking at 23,500 today? We'll wait and see. Very short break. We're going to give you the F&O setup on the other side with Agam.
Back with India market close right here on NDTV Profit. The mid-cap, the Nifty is at all-time highs. The mid-cap 100 is doing well. Small caps doing well. We may argue all we want to about how the market may be overvalued, narrow, what have you, if you have that argument. But the market is going one way, and that is up for the time being. Agam is standing by to talk about the derivative cues as well for the day. And Agam, what stands out there? I mean, to us, it seemed like defense and autos are the shining stars today.
They certainly are, Niraj. Largely, it's essentially that pack which is doing well in trade today. And if you consider the Nifty 50 again, not a lot of people were expecting the Nifty to close at another life high, but it seem like that's going to happen today because of the expectation of consolidation. Now, over the past 4 days, we actually have, it may have looked like a consolidation, but there's just been an ever so slight tilt towards the upside as well for the Nifty. And Friday, as being a seasonality, people would have expected some amount of profit taking as far as the Nifty is concerned, but that's really not come through. In fact, the Nifty, it does seem like it's once again edging towards the mark of 23,500. And we're seeing more longs there as well with the increase in open interest. The Bank Nifty, the picture is not very different, and we see about a 0.25% up move there as well, inching back towards the mark of 50,000 when it comes to the spot, and again another 4.5% added in OI there as well. Are we looking at euphoria? Well, not necessarily. We're still, well away from your historically, 95% of standard deviation, moves, but we still have a lot in terms of ground that we have already covered. 23,400, 23,500 are the levels that we are keeping an eye today because of the kind of traction that we've seen, and naturally we will see a lot more writing around those levels too. Let's talk about stocks then. And in stocks, of course, more gainers than losers. Longs for ABB, which has actually made a new life high, along with Siemens. ICICI Lombard, along with ICICI Prudential, both of them advancing with good addition. Open interest there as well. And among stocks which are seeing unwinding, let's pull that list up. We have short covering for MGL, Marico and City Union Bank. Longs unwinding for Sun TV and Bosch. But all in all, a good day of trade and also potentially a good end to this trading week.
Yeah, thanks for that, Agam. And so many stocks up and about there. You just see Trent, for example, it's now up 4% higher in trade. Vodafone Idea has gained a little bit as well, up about 4% in trade. Polymedicure on some substantially high volumes is up about 7%. So some stocks are really sharpening up their gains as we speak. Jay, anything out here? A Vodafone, a Trent, a Polymedicure, a clutch of stocks flying around?
Yeah, both Trent and Polymedicure look attractive to me. In fact, Polymedicure is, building on its impulse, and I'm expecting the stock to touch about 2,300. But you've got to be exercising a bit of caution. Position sizing should be the name of the game, and you should keep a stop at about 1,700, 1,720, and expect 2,300 to come about in the next 2 weeks.
Jay, are you excited about Mazagon? I know we spoke about some defense stocks, but specifically about Mazagon?
Yeah, when we spoke about Mazagon just about a few weeks ago, that was my top pick, and it's behaving as expected. And I'm still got some more upsides to work with, probably about 4,800. But risk rewards are starting to skew for fresh positions. So maintain trailing stops at about 3,000. And continue to hold for 4,800 objective.
It's interesting, Vijay. It's not that the likes of Trent or of Varun Beverages are cheap stocks by valuation metrics, but still perking up as if there is no tomorrow.
Yeah, at times markets do their excesses. But yes, I think the seasoned ones are able to, spot those excesses and stay aside. As I said, Tamanna was asking are you excited about Mazagon talk? I understand you run a 24/7 channel. You need to excite people. But again, it's about patience and not excitement. Investing in the markets and gaining money is always about patience, picking the right stocks. It's never about a kick. It's never about an excitement. The newer the investors,
Vijay,
I would say.
Vijay, I must correct you there. I mean, if I could excite people, the markets would be up on a circuit every single day. This is what the markets are doing. What we are doing is merely reporting that.
I just want to, again, maybe I chose the wrong words.
No, I'm just saying this here.
Vijay, since you're referring to what I said, fair question. But the fact is that why are markets so excited about Mazgaon Dock? How much is it going to run up further? And is this irrational exuberance or does it make sense? That is something that, we should try and inform the viewer about.
Well, markets do their excesses, as I said, Tamanna. And, the people who are there, who are seasoned, who have been there in the market, they should be able to spot that irrational exuberance, as you said. The problem is that, a lot of retail participation has come. And when, Mazgaon Dock, stocks like Mazgaon Dock and others, when they get highlighted on all the business channels, all through the day, people just go and keep on buying. I think that it's a great company, fantastic company. Why only Mazgaon? Why not Cochin Shipyard or the GRSC, which have done fantastically well? Look at BEML, it has gone past 4,000. So all these companies, defense companies, are great companies to have in a portfolio. But yes, I think that there is a time when profit booking would start. And these, I would say that gullible investors who are probably the first timers in the market, probably they don't even sense that. So I just want to sensitize the masses about not getting carried away. So markets, you make money for sure, but again, you have to be in the right stock at the right time, entry and exit both. I have clearly said, you asked me about defense plays. I think that, all these companies are great companies having great order books, much higher than their, market capitalization. They would do fantastically well in the next 5 years. But again, wait for a correction. Keep on booking profits. Don't get trapped. The last Tuesday, what we saw, I've got at least maybe 50, 60 phone calls. People got trapped and, they just sold at lower levels because at times they're not able to see that, carnage in their portfolio. They're not able to see that threat. So again, it's not about exciting people. It's about guiding people. I think that you guys do a great job with great amount of wisdom and great amount of insights into companies and stuff. I still remember the question, Nirav, when you said that, about Symphony. I remember I recommended that stock and you said that this company is going nowhere since 5 years. Look at where Symphony is today. And the reason is because it's a good company, great company, fantastic management, great product, great pipeline of products and fantastic distribution channel as well. I hope you remember this. So it is about guiding people, buying the stock at the right time. It was trading close to about 845 or 845 or 850 or something. And when we discussed this, it was going nowhere. But yes, I think that all of us have, we have to take the onus of guiding people, informing people the right things. Or, instances like, BCG, I'm sure that a lot of people know about it, would happen.
Yeah.
And
point well noted.
So I really appreciate your team and the job you're doing. But again, we as people who you invite to talk, we should talk sense.
Of course. And which is why we invite you. Else, trust me, Vijay, else that wouldn't be the case. But let's shift tracks and we focus on a pocket which has gotten a bit of an uptick today, and that's banks. So update from CLSA on the banking space. Varsha joins in first to lay out what CLSA has to say about some of the private banks. They prefer ICICI and IndusInd, if I'm not wrong. Varsha.
CLSA do have a report on banks wherein they prefer ICICI and IndusInd Bank. They believe that Indian banks are well placed after roller coaster ride in the last decade that we have seen, and balance sheets according to them are strongest in over a decade, and deposit growth should follow. Now against this backdrop, if you see, PSU banks outperformed private sector banks in past 5 years from a low base, and private sector banks which have been stock market laggards should now give better returns given a good business outlook and inexpensive valuation according to CLSA. Now they also expect a degree of normalization in unsecured loan growth from 20% to mid to high teens, and estimate overall loan growth of around 14 to 15% over the next 2 years, and they expect private sector banks to continue gain market share. Lastly, if you see, the key short-term risk that CLSA sees is sharp repo rate cut that would reverse the net interest margin improvement that they have delivered.
Thanks, Varsha. Well, does the cheap valuation of private banks make them attractive to invest? Here's Sage One Samit Vartak talking about the factors to watch out for aside of valuations while investing in banks or otherwise. Listen in.
Yeah, I think personally for me, buying cheap, as the first decision-making parameter has been few of the biggest mistakes that I've made. Right? For me, hence, what I do is I want fundamentally stronger business, not in just terms of the quality of business, but also in terms of growth as the first parameter. Only if it meets my growth criteria would I look at the valuations as a secondary metric. Valuation is also important, but it, for me, it has to be secondary. And, in the same way, and I think investors make the, same mistake a lot of times in terms of markets too, right? Because most of the time they take a decision of exiting the market or going into large cash just because of the valuation without looking at kind of growth potential, that you have. So I would say private banks are a good space to be in. They are cheap, but cheap doesn't mean high returns. The majority of the returns that you will get will be from earnings growth over a longer period of time. In the short run, you can make tactical, returns just because of valuation, maybe getting re-rated. But then again, there is a lot of timing aspect, which is very difficult to do. And overall at a market, I mean, maybe not exactly related to your question, but, I think it's an important learning for me over multiple cycles is that one of the biggest mistakes that you can do is staying out of a fundamentally strong market, because the returns are so concentrated during this such a bull market that even if you miss, a couple of years sitting on large cash, it's one of the biggest mistakes that you can do. And unfortunately, valuation is the only parameter that people, use to take such large margin calls, So, but if you focus on earnings, earnings, if you are getting 20% earnings growth, and okay, the valuation may be 20% higher, right? So even if the valuation is correct, but if your earnings are growing as much as what the overvaluation was, you may lose out on 1 year of returns. But if your horizon is 3 to 4 years at least, then you will make returns of the earnings growth over the remainder of the years, and those are also reasonably good, compared to any other asset class that one would get. So in such an environment where the fundamentals are so strong in terms of growth, if you're always standing at the exit, a bull market will give you so many head fakes to get you out of the market. It can be election results, it can be just valuations, it can be some war, in an unrelated territory. If you are standing at the exit, you will exit, and bull market, riding a full bull market is one of the toughest things to do. But if you focus on fundamentals of earnings, at least there is a chance of riding to the entire bull market. And most of the money is made by riding to the entire bull market, and getting out is very easy in a bull market. And that's generally turns out to be one of the most expensive decisions that you'll make.
All right, so you can listen to that entire conversation with Samit Vartak, of course, on all of our social media platforms. But meanwhile, that take from CLSA on private banks was quite interesting. Jay Bala, keen to know your view, especially on which ones do you think have further upside? I mean, HDFC Bank in focus today. Let's start with that.
Yeah, I think HDFC Bank and Kotak Bank don't have much upsides. Sorry to disappoint there. But, when it comes to private banks, probably, Axis Bank has got short-term upsides and probably a little more upside. But I'll come to the very short term. Generally, June tends to be very poor for banks. If you look at the data for the last 20 years, June has always been sort of a very middling or to slightly negative kind of returns for banks. So, you may not see much upsides to work with for most of the banks this month, maybe something to work with in July. But in the private banking space, I like Axis Bank, probably upside potential close to 1,300. But stop loss below 1,100 is a must. Generally, SBI also is looking good in the PSU space. But once again, it's run up quite a lot. So it's an avoid for me at current levels.
Okay, it's 3:20. Jay, if I had to ask you for a closing strategy, it's a 3-day weekend, I know. But if you had to give a closing strategy.
Yeah, when we were speaking about Hyundai, I wanted to mention this, but I just held back so that we can talk about it as a BTS basis. Wheels India, it's breaking out from a very long-term downturn trend line. It's been a downtrend from 2018. The fact that it crossed 780 on a closing basis yesterday, that's giving it a breakout, and it's got huge upside potential. Given that TVS, it's in a TVS group stock, and TVS Motors is already on a 50-week highs, and we have Hyundai IPO lined up. This might be a good candidate to pick. A stop loss at about 720, probably potential about 1200 to 1300 in the medium term. As a BTST, stop loss at about 750, objective about 860, 870 for Tuesday.
Jay, what about Minda Corp? So news just a short while ago, they've signed a JV agreement with HSI and Chong Machinery Works for manufacturing automotive sunroof solutions for passenger cars. It's a 50-50 JV to be in operation through a new entity. Now, Minda Corp, if you look at the entire auto Ank play, does that look like a good candidate?
Yeah, it does look like it's got an unfinished price of close to 525. But the caution there, it's not responding to its peers. So that should be a sign of caution for you. But a stop loss is about 400 for an objective of 525 for the stock.
Vijay, what about the auto Ank space and Minda Corp?
Good company. I would say Minda is one of the best larger players in the auto ancillary space. They have Minda, they have so I think these companies have been doing well. Overall, I think that they've done fantastically well if you look at the last 2 years. But again, I would say that wait for corrections to come. Although Minda Corp, I think that it can go up to maybe 490, 500. But again, keep on booking profits. And on the other side, I would say that all these companies are great companies. Wait for correction to get into them. Just don't, jump and buy. There are other companies which you can buy. If you allow me, I can name few companies. I think that they look good on the charts as well as fundamentally they are very strong.
Yeah, of course. Please go ahead.
So I think that one company I like is the Mishra Dhatu Nigam. It's a Government of India company, and it does very well and does a lot of alloys, which also are used in defense. So Midhani is one company which I like. Another company is a bank. It's Bank India, again a Government of India company, and very good financials, and asset quality is very stable. So Bank India around 125 you can buy at these levels. And finally, I would like to recommend Geo Finance. I think that Geo Finance is coming up with larger plans with BlackRock in the backing. I think that this stock and this company can do wonders in the coming years. It is a potential multi-bagger according to me, and on every decline one should buy.
So GeoFin is a potential multi-bagger. You also have the other names, Bank of India that he mentioned, Mishra Dhatu as well. So these are some of the big names this afternoon. Well, as the day winds down and as the trading day winds down, we're very, very close to the appetizing 23,500 levels, but you've hit an all-time high. Suffice to say, the journey is upwards and onwards. On a broader perspective for next week, and let's set that up, Vijay. What do you think are going to be the big triggers? Because you've seen a week, I would say, of sideways movement and a bit of consolidation as well through the week, and you have a truncated week next week, but where do you think the big triggers are coming from?
Well, I think that this is a pre-budget rally which we are seeing right now. And the budget is expected around the 2nd or 3rd week of July. If I'm not wrong, I think the 3rd week. So we might see a rally till the 1st week of July. So the trigger is the budget and the expectations around the budget. So why defense companies are running, why there is a up move in certain sectors, primarily because I think that even cement, that it is expected that there is going to be a huge outlay on infrastructure, something for the cement companies. So this expectation is built up every year. And I think that this year, because earlier was an interim budget, so budget is the trigger. And, it's not very far away, practically almost a month. So we have about 20 odd trading days here. So that is the budget. That is the trigger, I think. And there's going to be sector-specific and stock-specific movement. We've discussed a lot of sectors and stocks already. So I don't think that indices are going to do much. Every 1 point it is going to go up. It's all-time high. We might see some correction in the indices. That's okay. But yes, I think that stock-specific movement would definitely be there.
Yeah, I agree. The all-time highs are now, you're already in that territory. So this is, more of a feel-good than anything massively changing there. Jay, you've given us your BTST calls, but if I were to ask you to, give us your top 2 or 3 calls for the whole week, do you think that the upside in defense continues, or are there new sectors that you're looking at or new stocks that you're looking at?
Yeah, from here on, it's about what you avoid rather than what you choose. So be quite careful about what you choose. And I would say, if you recall our conversation in May, I said FMCG has got upsides to work with for about 60,000 once it crosses 56,000. And here we are, we crossed 59,000 last week. And I think that's going to come back probably next week. And look at, foreign collaborated Indian stocks or foreign owned Indian stock like Siemens, ABB. Probably they still got upsides to work with. And also, if you look at something like Federal Mogul Goetz, we picked this up about a couple of weeks ago, and I think it's got potential to scale about 500. So, FMCG as a sector and a foreign-owned Indian subsidiary.
Well, gentlemen, have a great long weekend. Thanks so much, both of you, for joining in today and giving us your thoughts. Really appreciate your time this afternoon. Let's start wrapping up the markets. I mean, that move in ABB took my breath away, because that's a really, it's been an afternoon of expensive stocks just moving on further. A trend of Varun Beverages, ABB, the defense names. It's just been crazy what's happening at the expensive stocks. But let's just very quickly get the heat map up on the screen. I'll do the boring part, which is the Nifty 50 components, because, who wants to watch these? The index is just up 0.25%. Maybe an iShare, maybe M&M, maybe Adani Ports, or maybe a Tech Mahindra and a TCS. That's par for the course, hardly anything. Tamanna, the exciting stuff is what's happening beyond these 50.
We should just straight away pull up the S&P 500, the BSE 500 top gainers and losers, because that's where all the excitement is. And I reckon you will see a lot of defense names there. At least Mazgar Docs are right up 14%. We'll also pull up in a bit Paras Defense, BDL, that whole lot.
But there's SKF.
SKF about 11.5%, 12% over there. So, you completely have, I think Agam was telling us in the break that what's happening, people only want to buy defense stocks.
Yeah, or industrials, right? Because if SKF is up 11%, ABB is up 7%.
Correct.
Some serious capex beneficiaries out here.
So capex, industrials, this is why we're saying this is a pre-budget rally, and that theme has completely begun. But as we wound down, let's just take a look at the week gone by. And this was an important one, because this is where the dust has settled. You've had a government in place. One big trigger was also what the cabinet will look like, what the council of ministers would look like, and you had that clarity come in by the start of the week. So over the week, the Nifty up 3%, not bad at all. By any stretch of the imagination, 2% up nearly for the Bank Nifty. I want to pull up the mid-cap and small-cap indices, because that's where the action really was. About 5.5% in a week on the Nifty mid-cap 150. And the broader markets really revving up, 7% up on the small-cap at 250. We're also getting the PSU index up for you, because look at where all the action is. And if you really had to get a sense, 8% up over there. So PSU is back in flavor. You started the sum up, Niraj, talking about valuations. I think nobody is thinking about valuations. They may be talking about it, but they're not thinking about it. The definition of what's expensive and what's not has really been re-looked at by the market.
Yeah. Quite stunning, really, what's happened today. But, that's what we do. We report on what's stunning. And this week has really been stunning for a bunch of sectors. But it's a long weekend, so have a good one. From Tamanna and me and the team that has put this show together. Thanks so much for watching. And of course, see you with all the live market action on Tuesday. But action continues through the weekend on NDTV Profit. So do tune in for the weekend programming as well. Thanks for tuning in today.